Hi guys, in this video I'm gonna go over Bitcoin ETF versus Bitcoin ETF futures. I see and read plenty of comments, people are really getting confused. Let's go over the details, let's see what are the benefits, what are the issues with this, and are you gonna be better off just buying crypto of Coinbase than buying the Bitcoin ETF itself. Let's first go over what is the difference between Bitcoin futures ETF and the Bitcoin ETF. So first of all, Bitcoin futures ETF aims to track the price changes in Bitcoin. They don't directly have one-to-one price discrepancy with Bitcoin. If Bitcoin goes up 10%, it doesn't mean that the Bitcoin futures will go 10%, okay? Simply by buying and selling Bitcoin, companies or funds who are providing these future ETFs, they're trying to match or mimic the price action. They're trying to hedge the particular moves of the market. While Bitcoin ETFs simply they hold the Bitcoin. So the prices of the Bitcoin ETF, regular ETF, will be closer to the prices of the Bitcoin itself versus the prices of the Bitcoin futures ETF, because the composition of what is inside these pools of futures is different. It's how pure it is. Let me put it this way. Let me put it very simple. So for example, if you have 100% Bitcoin consistency, some of these ETFs, regular ETF holds 100% Bitcoin, and if Bitcoin goes up 10%, well, this ETF might go 10% as well. No problem with it, right? Nothing stopping him to go 10% up. But the futures ETF are not 100% pure Bitcoin. They have a contrast of different crypto assets in some sense to hedge. So this means that they will or they could go only 5%. They could go only 3%. They could go only 6%, right? So the purity over here plays a huge role. Second important, of course, metric over here is that the risk associated with both. Is it the same? Is it different? Well, if you think about it, right, depends of what is inside the futures ETF. Most likely it will be more volatile because when the Bitcoin does a move on the way up or on the way down, every other cryptocurrency, in most cases, of course, with some examples, are following the price action. Sometimes Bitcoin could go down 10% and their other cryptos could go down 10, 20, 50%, right? So understand that the large move is usually followed by the price action of Bitcoin. So in my opinion, not a financial advice, the futures ETF might have greater swings, meaning greater volatility and higher risk. The issues with investing in Bitcoin through ETFs in general, it's very obvious and very good coverage here from Investopedia. Bitcoin futures ETF can make it easier. Of course, you can buy without holding the Bitcoin itself, right? But the main issue is that they come with a price. You may be able to invest with lower fees by buying Bitcoin directly on the exchanges. That's what people usually do. You can just go on Coinbase and just buy the crypto itself, and you can hold it. You can put it on the Coinbase wallet, or you can just put it on cold storage, right? You don't have to have this sophisticated funds to buy trade for you, right? For me, it doesn't make sense. Again, bottom line, Bitcoin futures ETFs are funds that are bundled with Bitcoin future contracts, okay? They provide investors with the means of desire to invest directly into cryptocurrency, way to gain exposure to this volatile. Reading all these guys, I hope you understand that this product is essentially for people that have a lot of money, different generation, right? They don't want to get into blockchain. They don't want to learn about individual cryptos, right? They want to stay away, but they just want to have like a small, piece to speculate on the market. It's like these people who are going, and bet on horses. They bet on the casino, on gambling. It's just they have so much money. So another, way to risk their money is not gonna, change their risk tolerance. This is how I actually comprehend the information. This is not for, regular person who is already, educated about crypto, who already traded, who bought some meme coins, right? Lost some money already on the market. This is not for this type of people. This is for people with millions of dollars who simply are extremely bored of buying S&P and holding S&P for like the last 30-40 years. For more tips and tricks like this, guys, subscribe and follow for more.